General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Alright, got my charts, got my coffee. Do top down. Start with NASDAQ. TD. Okay. Can we say the monthly is officially bearish? Let's go to here. Highest up close candle. The highest up close candle's high. And the highest up close candle's low. This price I would want to close here. So from the monthly perspective, I wouldn't even really say this is bearish. I would say this is bearish weekly, just because this is the highest we went. This ain't going higher. This is going sideways. This is just wicking the low. So to me, that's not bearish. Monthly sideways. Premium Ray. I'll say it's this monthly volume imbalance. And discount. This is September's low. But this is November. Oh, this is October. This is November because that's the low everybody wanted. All right, cool. We got the monthly VR. September low. See what the weekly doing. The weekly's barely bearish, but look, it really. It's like I don't want to be bearish. That's what it looked like. And then look at all these dojis. That's real price action. This one closed lower than this one. This one closed lower than this one. Yeah. Such an ugly delivery. You have to give it bearish though. Just cause it's the highest and we're closing below it. Closing below it. Alright, from the weekly perspective, what do we have here? This monthly volume imbalance. So technically this is our low hanging fruit because it starts the weekly volume imbalance. That's that open. That's that close. Dang. This has been volume imbalance. Land. And from I don't like this candle to call it the order block just because it didn't really take no liquidity. And even I think this low is lower than this because August, September. Yeah, it has to be. It could be equal. Let's see. It's relative equal lows look like it. One of them is 79 and one of them is 70. So if I stretch this out, we got relative equal lows on the weekly. And then put this on here. Just so I keep track of the level. And it's a monthly level. Cool. Comparison and premium, we had a weekly volume balance. Distance, we had relative equal lows. Go to daily. Daily's bearish. Alright, what's interesting here? Don't really got gaps like gaps is my favorite array. That's a good high. Mm, it's not really a swing point, but it is low resistance. I could see like a little bounce here, but there's nothing here. I'm not gonna form fit this into an order block or nothing like that. We still bearish. And let's look over here, see if it's anything interesting. This the daily. Definitely no gaps. We already swept all of this, didn't we? No, we didn't. Look at this. So after here, if we close through here, this is basically low resistance. We don't got no gaps to slow us down. And this is the next low. Boom, boom. I would watch this just because now that we above it, I definitely would watch the SMA. It could offer as like a bounce. A lot of people gonna be watching it too. I might put it on all the time frames just so I can have it. You see all the reactions we got? People are watching that. And all those bounces, now that we're starting to close below it, it's gonna be like, that's when people are supposed to buy. So just us being under there, that means people are sad. Nobody wants the market to be under there. Everybody tried to buy it. It's good. But yeah, definitely right around here. Truly bearish. This up candle body should offer support. 50% of this wick, like enhanced order block or Jamaican wig or whatever. This camp we got low resistance liquidity one, two lows. Premium we got a 200 SMA. Let's go to the H4. It's definitely bearish. H4, this does look like internal range liquidity now. Nice little up candle nested. Yeah, I can see this getting wick with like a down candle and then push down, especially when it kind of looks like a OTE too. Let's put it here. See this the 618. It lines up. It's a little gap there too. I can actually define that with this. Hold on. Oh, come on. here to here. That's the 618, 715 to the 719. Oh, where'd my box go? Where is my box? There we go. Current from below. Lock. That'll handle that. Premium note. Let's go see what we got over here. Which I think is just the same old, that low resistance. Yeah. Then that's the relative equal lows. Yeah, so there's nothing up there. Here's premium. We got internal liquidity plus OTE. And bearish, we got nothing. H1. I think we pretty much covered it with the higher time frame levels. That's the beauty of it. All right, cool. Let's knock out the next one. TA. Looks like this is always faster. I think this monthly is actually bearish though, because look. Highest up candle. And we definitely have a body close. Premium, we got that monthly volume imbalance here. So like okay, yeah, we got double equal lows there. September low is pretty far over here. Okay. Okay. See what the weekly doing. Weekly definitely bearish. Premium, man, this is more prominent than this one, so I got to mark it. It's madness. Look, it say major inefficiency. Bearish. So I'm gonna put weekly prominent. Fighting the bones. PUBI. See what we got here. We do got relative equal lows here. And below, hold on. Below. Go to the day. Day's definitely bearish. We got the 200 above there. See if we get reactions. And on the daily, we still got that low resistance liquidity run. So they twins. That's the only thing about looking at both of them. It'd be like doing the same thing twice. But then when it's the S&T, it's like, okay, that's the hint. But it is a little bit faster though. So it's pros and cons. We got the same internal range liquidity. So OTE kind of fits perfect, It could be an OTE week just like this, and then maybe I need to fix that. Alright, so now save it. Hold on. Alright, that should be fixed now. It all depends on how you save it. Oh, but it could be an OTE week, like, perfect week. One extension after that. And it'll still be a hard week. It's the irony. Until I got down here, it's probably nothing. Lows. More lows. This is some August stuff, which is 62. We can gap down here, really. That's the thing about it. If we get it all nice and pretty, we can gap way down here. I'm gonna tell them, especially with the news cycle we got now. Let's do this. Let's do SPY. SPY chart look good. See this high sub candle on the monthly on the SPY here. And we got this monthly volume balance way up here. Okay. It's bearish. We got this is September's low here. Okay. Cool. Them ducks, well, they ain't ducks, they geese. They be out there loud. Weekly's bearish still. What do we have? Have us another weekly volume imbalance above. Looks a lot cleaner here without all the electronic cower stuff. Just plain old stock market. You see, we kind of getting like a little, like we need a body to close through here. See that? Discount wise, we do have relative equal lows just like on everything else. The next one is down here. It's kind of holding price. It's interesting because it's higher time frame. Now I want to see this gap probably really like that. Let's see. This. And is this higher than that? It is. Yeah, we wouldn't dare close in there. So let's do it this way. I want to know this actual price. It's interesting when we had 3 down weeks. That's also something new. It could be 3 drives down, retracement week, you know. But with all the war and all that stuff, we could just rush down here stay until the war is over, and then, you know, go back up. All right, so weekly. Volume balance and relative equal lows. Just daily. I'll go here, go back here. All right, go to the daily. Yeah, we got the 200 above us, some gaps. First off, this is bearish. Above us, we got an up candle. Yeah, the 200. We can't form fit nothing up there. What do we got below us? It is the low resistance. We got the same thing. Let's see if we got the OTE over here too. Oh snap, Control Z. How am I able to move this anyway? This should be locked. So let's get the OTE here. We got an order block right here too. Boom. That was perfect. Didn't disappear. And lock this. Terms, liquidity plus OTE. And neither one of them really had anything noteworthy to put on discount. Hold on. There's a little order block there too. Right above. Let's mark this level. Just in case we get a crazy reaction. 639. Page 4. Discount. What's that? 639. 37. Order block right above September low. Alright, cool. And we looking for it to go up. We look for buys up to here. And we got an order block after OTE. But OTE 200, it'll be kind of like decision point. And good to ring everybody back in and smack them back down and say, get their hopes up. Okay, so the chart part is cool. Let's pause. Alright, let's do the chart work. Is it 5 weeks this month? It is. Let me see. Market watch. For week 1, week 2, week 3. Okay, it's only 4. So we don't need this. Then I need the dates, the 23rd through the 27th. What? Weekly open. Let's get this calendar. Yeah, we just had all the. See this too. Unemployment, Europe due date, daylight savings time too. Let's get this ready. This is more like a Tuesday, high of the week, something like that. Unemployment is not going to be good. PMI, I don't think none of those metrics going to be okay. Where's my screen grabber? Pretty sure I started that up. There we go. Monday through Friday. On Tuesday, has me thinking. Tuesday high or low of the week. Most likely Tuesday high of the week. And OTE. Let's go here. CME. Here we go. Okay. They open in longs and shorts. Non-commercials are open in shorts. Non-commercials are selling short. Then we have commercials. An interest on shorts rising as well. Shorts. Let's make a bull case. Non-commercials have more longs than bulls, but they don't really have none of the open interest. Commercials got all the shorts. Non-commercials are opening more shorts. More shorts are getting open than longs. Let's see what Larry. Okay. Non-commercials bullish, commercials bearish. Commercials are already very heavy net short. Not a breakout, not an early trend. Instead, distribution topping in reversal risk. Speculation is chasing upside, commercials selling into strength. Open interest is rising, positions being added, not liquidated. That's what I'm saying. Yeah. Let's keep going. Hold on. Trend exhaustion environment. Commercial net, extreme positioning. It's not neutral hedging. Extremes in commercial positioning precede major directional moves, and usually against the specs. Why are they long? Wait, you can't tell me that, but why are they buying in the war? What they like insider trading and they know Trump finna do something. I wouldn't put it past them. Okay, let's go to the spot. I'm really trying to catch bottoms. Let's see what the spot talking about. It look even. A little bit more long than short. It's not interesting. These guys are short on the non-commercials. And they're closing shorts. They're really closing shorts. Okay. Closing a lot of shorts. Commercials don't really seem directional. It gives a wait and see vibe. This is SPY. Yep, non-commercials. It's a split market, but the key signals. Contrarian bullish. Short covering rally, upside squeeze. Large specs are trapped short. Commercials are absorbing supply. Open interest surge. Wow. New positions are being built. It's a setup phase. This is about a dip environment, not sell the rally one. Wow. Yeah, I do want to see that intermarket divergence. It's just talking about this directly to the NASDAQ. Bam. Into market divergence. NASDAQ. Okay. Large specs. Small traders. Smart money selling, specs buy. Commercial short NASDAQ. That's not random. Money flowing out of NASDAQ in that S&P. Distribution weekends, accumulation. Oh, they're trying to tell me to trade SPY because it's stronger. NASDAQ short S&P. That's crazy, huh? Well, I guess it depends on your box for the week. I'm bearish, so I should trade. NASDAQ. Interesting. Pause here. We gotta zoom in because this page is getting too long. Calendar in there, COT in there. All right, Fed watch. They're not gonna do nothing with them rates while this war going on. No change, 87%. April. Next Fed. No chance of rate hike or rate cut. 87.6. I don't think it's no earnings. Where's the calendar? Here you go. Maybe it's up here. Here it is. Bam. GameStop. That's nothing. Nothing ever reports on Friday. Let's get this screen. Grab Monday. KB Homes. Okay. No interest in earnings. Crazy bear sentiment. I need 9 weeks days. Let's get it. Nine. Boom. Okay. Boom. Right. And then let's go here. Okay. Lock this. And note to self, it might be better to sell QQQ instead of sell SPY. Yeah. Boom. 9 weeks a day is here. And super discount. If this is the algorithm referencing, this looks a little bit interesting. Just because it's like a buy side liquidity pool. This is a stop hunt. Really, this liquidity pool and this. But just running up here is interesting. Current flow. Yeah, that makes sense. Just from this perspective, we wicked it, still in discount. Hmm, I think we push lower with a shallow retracement. But if we displace higher, we have two good buy side liquidity pools and premium to target. Anchor point interaction. Hmm, we're in a range. No real anchor point or daily price runs. Store the price alignment or That's it, really. Just let me just put straight up her moves. Boom. And we always want to engage, which we need to not always want to engage. We need to work on that. Let's go here. Let's get these 9 weeks days here. We don't got that. We only got this one here. Hold on. Lock that up. Oh snap. Control Z. Here we go. And, same here. Shallow retracements. No. CLT is buying spot. Selling NASDAQ. Lower prices. Anchor point interaction. I could say like March, how March opened is weird. Nah, nah, I'm not gonna give it an anchor point. It's not good price runs. No good anchor points. We've been in a choppy range. Can't force an anchor point. Straight up moves. And we want to engage. Let's look at the spot. No, days. Buy side liquidity's way up here. I think the nose would be no. Well, back of behind the target for retracements. Yeah, it really don't need no new levels. Anchor point interaction. Been trending down since the end of February. Store the price alignment or re-engage. Put more space here too. Scale focus, price action. General intent, steady. Case that honey plan. We study options. Yeah. Be conservative. War drama, news, etc. Tuesday, news on Tuesday. On Tuesday should provide anchor. Boom. All right, that's that on that. Y'all have a good day. Peace.